Data entry may seem boring, but you never know the story behind the information being entered and the patterns that emerge. Some data has distinctive characteristics that point towards fraudulent activities. Today's guest is Leah Wietholter. Leah is the CEO and founder of Workman Forensics, as well as the host of the Investigation Game podcast. After working for the FBI, she served as a senior certified fraud examiner in Tulsa, and she currently volunteers as a treasurer for the Tulsa Crime Stoppers. With over 15 years of experience and more than 100 cases worked, Leah has honed her industry expertise to create the Data Sleuth Process, a scalable, data-first approach to forensic accounting engagements and fraud investigations. I'm your host, Chris Parker, and this is the Easy Prey Podcast. Leah, thank you so much for coming on the Easy Prey Podcast today.
Thank you so much for having me.
So can you give myself and audience a little background about who you are and what you do?
Yeah, so I am the CEO and founder of Workman Forensics. We're located in Tulsa, Oklahoma, and we're a forensic accounting and fraud investigation firm. I have 6 employees, the majority of which are investigators, as I'm sure you'd assume, and it's a wide range. We actually have a geologist that we've turned into our data analytics manager. She is incredible with data and data analytics. And then, of course, we also have private investigators. I'm a private investigator. We have certified fraud examiners. I'm a certified fraud examiner. And then we have CPAs on our staff, too. And then what kind of makes us even a little more different, though, is that we also have a creative team because we we work investigations for sure, but then our creative team helps us with marketing and all of those things. But we also provide trainings that are game-based trainings, and it's called the Investigation Game.
Oh, I like that.
Yeah, it's a lot of fun. And then we produce a podcast called the Investigation Game Podcast. And then more recently, I had the opportunity to write a book that Wiley Publishers is publishing that's about our Data Sleuth Process. So we're always doing something creative and working investigations.
It's
awesome. Kind of my dream come true,
That sounds like a lot of fun.
Yeah.
So was there like some precipitating event which got you interested in fraud investigation, or did you just kind of fall into it?
Well, it's a little of both. So, but I wasn't like the victim of a fraud at all. When I was 12 years old, and maybe even before that, I just loved reading as a kid, but primarily mystery novels. And then when I was about 12, I was listening to this radio drama, and they had this one character that was a agent for NSA. And I think that was kind of the first time in my life that I realized, oh, there's more than like being a teacher or a mom for females. It was kind of a defining moment for me. And so I thought, that's it. I'm going to be an investigator. And so I was very intense about it. And so I started studying about all kinds of investigating and I decided by the time I was in high school, I had decided I'm going to work for the FBI. And that was my agency of choice. And so when I went to college, I chose my major based on how the FBI hired. I was so strategic about this. And then they hired out of accounting programs. And so I knew I could become an FBI agent if I did this. So I majored in accounting, and my junior year of college, I was chosen as an FBI honors intern, where I got to work on the East Coast for 10 weeks in their internship program. And in doing that, I was then allowed to come back to Tulsa because I went to Oral Roberts here in Tulsa. And so I got to come back to Tulsa, finish out my undergrad, and start my graduate degree while working under a forensic accountant at the local FBI office. And so that's where I got my start. So I started off as an investigator and then ended up here. After working for the FBI for 2 years, I worked in public accounting because I thought that would be a good life decision. I could always find a job if I had some accounting experience, was the idea. While I was working in public accounting in Tulsa, forensic accounting was becoming more popular for forensic accountants to work fraud investigations in the private sector before it went to law enforcement. And having worked for the FBI, the public accounting firm said, hey, I bet Leah could do this. And so totally different. That's not how it works. It's not just like a natural thing there. I had to figure out how to do that without having subpoena power and those types of things. But I started doing that. And so I did tax and forensic accounting for 2.5 years. And then over 11 years ago, I started Workman Forensics, which has become what it is today.
Nice. So Out of curiosity, is working for the FBI doing forensic accounting, is it mostly like criminal organizations, or is it corporations that have, you're trying to figure out if they've cheated on their taxes, or individuals, or just kind of a mix of everything?
I think it's, at least when I was there, it seems like it was location. So since I was working out of Tulsa, there were a lot of white collar crimes, but it was really happening at like maybe a mortgage fraud, like maybe a company was taking advantage of some mortgage programs, or embezzlement, which is what I still work today. There weren't as many, like, you'd probably see different cases in New York than you would in Tulsa, just because of the types of employers and things that we have here. But so for me, I worked on like a pump and dump scheme, a stock scheme, which was pretty fun and a little unusual for Tulsa area, for like those types of investment scams, although they exist in the areas of oil and gas around here. But so anyway, it was all over the place. I never knew. I ended up testifying before grand jury while I was there as the student position, testified before grand jury about Hurricane Katrina fraud. So people who were taking advantage of FEMA funds. And so there was a priority to take action with those. So I testified before grand jury on those. But I did a lot of data entry while I was there. So anything that involved data, I was hand entering bank statements into Excel. That was my job for the first year. All this nice software that we have now that we still complain that it's not perfect. It's still better than what I did for a year and a half. So
that sounds very, very tedious.
It was, but it was also like the best foundation for what I do now.
Is it the sort of thing that when you're entering stuff into spreadsheets, you just start seeing patterns that your mind just kind of puts together and says, hey, this is unusual?
Yeah. There was this one case, I think it was the pump and dump stock scheme. And I was handed this huge box of documents. Leah, will you enter all of this? Okay, so I get to work on it. And I found this $450,000 transaction that on the bank statement, it said something about Belize. And at this point in time, I had not traveled very much. I mean, I don't know that I've traveled that much now, but definitely not then. And I just remembered that my best friend in high school, she went on a vacation to Belize. So I knew it wasn't in the US. Like that's where I was at. And so I remember I just went to research what this bank transaction said. And it identified a bank account that no one had yet discovered that was in Belize. And so I actually got a call one day from an attorney with the SEC saying, hey, tell me how you found this bank account. And I was just like, I was entering data into an Excel spreadsheet. Yeah, but like, how'd you find it? I'm like, no magic, just entering data. So anyway, they were able to start the process to try to seize that bank account from a foreign country and all that process. But yeah, that's, I remember the first few weeks, maybe months of entering data or bank information. I thought, oh my gosh, I am not going to make it here because I would just be so tired. I mean, my eyes are crossing. But then once I realized, actually, I'm the first person that gets to look at what actually happened, then that started making this information come alive, that I could actually provide value to the agent who was talking to people. And then that opened a lot of doors in my career, just being able to see the story behind what I was entering.
Yeah, that strikes me as interesting because you get the having that first pass to look at the data, the first pass to look at what's going on. You can almost kind of nudge the next investigator. Hey, take a look at this. This seems odd.
Right. Yeah.
Was that the sort of thing that over your career you've kind of learned to be able to identify almost from intuition that this seems like an unusual transaction?
Yeah. So actually, one of the things that kind of came out of that is our entire process that we use now internally, and I'll go ahead and just say that we made available in our book. I mean, it's like perfect segue for that. But so I've talked about it in the book about how to find these anomalies within data, primarily bank statements, credit card statements, payroll reports. But by understanding the patterns within this data and what are the most, like the highest risk transactions to notice in a data set that could indicate fraud, we've then built this process and subsequently tools that help us identify those things more quickly. So I'll give you an example. We do something where we take all of our bank statements and that are in a case, and we digitize them. Now I don't have an intern that does that by hand, but so we digitize these bank statements, and then we prepare something that we call our source and use summary report, which basically just says, here's where all the money came from on the deposit side. Here's where all the money went on a summary basis. Real simple. You can do it in Excel.
Mm-hmm.
So, but what we've done internally is that we have our tools that we use to then identify, okay, here are all of the payments to LLCs, to anything that ends in LLC, Corp, Co, Inc., right? So that's a section. We identify all transfers. So we pull that out into a section, any wires. And so those are kind of our big categories. Those are the things that if someone is stealing money, these are really high risk areas. And this is what it's going to show up as on the bank statement. Mm-hmm. So someone who controls all of the financials or financial bookkeeping, financial information in a company, they are going to, a lot of times they have access to the bank accounts where they can just go set up other bank accounts that then would allow internal bank transfers between the two accounts really easily. And so by doing that, by separating those transfers out, we can then identify, okay, are we aware of all of these bank accounts, or did this tell us about a bank account we didn't know? Or LLCs, by identifying these are all the LLCs that were paid out of this bank account. Are we familiar with all of these vendors? Should all of these people have been paid? And so then if we identify an LLC that we don't recognize, we can then go look at, okay, well, who owns this LLC? Oh, looks like this employee owns this LLC. So by using this, kind of building up from our bank statement, credit card statement, payroll information, we can then, it's this experience that allowed me to see, okay, these are our highest kind of categories of fraud risk.
Mm-hmm. So let's not talk about Fortune 500 companies because I don't want to. Let's sound a little more practical, because there's a lot of mom and pop businesses out there with a single person in charge of the accounting. That, to me, like from already where we've gone, that sounds like that's a big risk. What should owners of these small businesses be watching out for without having to dig too deeply into every single transaction?
Sure. So the first thing to do is to start thinking about your business as in the finances of your business as real simple. How do I receive money? And whenever I receive money, what is the actual form of payment? So check, cash, credit card, PayPal, Venmo, whatever that looks like. So identify what are all the ways that money comes into my business, who touches all of that money as it comes in. And then if someone was to steal money from me as it comes into my business, who would that be? And then lastly, how would I know? So it might be that if someone, I'll use my business as an example. We bill monthly. So these bills go out to customers. If I had one person controlling everything, which I don't, but if I had one person controlling everything, it could be possible that they could get a check in the mail, and then they're going to take that check and go deposit it to a checking account that they've set up with my business name, right? So I need to make sure that I'm looking for, did I collect everything I expected to collect this month, right? So that's how I would know. That's an example of that. Then I want to look at, how does money leave my business? And we're talking about just actual payments out of my business. So that might be for equipment. That's going to be for payroll. And payroll is going to be a big part. It might be that it leaves because I buy things on a credit card. So I might want to look at that. So if I can identify all the ways that money leaves my business, and then who touches the money, who approves it, who actually sends that payment, how would they steal money? And if they steal that money, how am I going to know?
Yeah.
And so the best way to identify that on the expenditure side is just to look at the bank statement and the checks every month. Just scroll through. Is there anything that you don't recognize? You're going to want to look at your payroll reports. Do your payroll reports, am I paying people what I expected to pay them? Especially look at the people that control it. So, I could get into a whole bunch of things on payroll. And then just look at the credit card statements. Now, there are some more granular tests you can do, like to make sure that you're not paying somebody's utility bill, or that someone isn't putting their credit card as a payee on your that they're not paying that out of your company bank account. There's some more granular things, but if you can conceptually identify how does money come in, how does money go out, who touches it, how would they steal, and then how would I know? That's going to help you kind of identify your best places to identify that.
Yeah, it's interesting. It makes me think about my own accounting. I'm a small business. I do it all myself, which there's arguments for and against that.
Right.
And I found it's interesting that a lot of companies that I work with, the company name on the transaction with the bank account, either coming or going, is not anywhere near the public facing name of the company. And I suppose there's a lot of that. That's probably not incredibly unusual. It's that sort of thing happens, that it's somewhat off. But I guess the name being not recognizable, at least on the first pass, is not always a red flag, or at least look deeper.
Yeah. And it's really what's normal for your business, right? So if it's common, like, oh, this company A, whenever they send payment, it looks like company B. That's just normal for your business. What might be a concern is that if the person who controls deposits and reconciling sets up an account in your business's name and then tells company A/B, hey, we've moved our bank account and now you're going to deposit your money here. That's where that risk would be. Yeah. When you're looking at the expenditure side, because really on a bank statement, you just have deposits and you have expenditures. So that's why we group and how we like to think about fraud risk are in those two broad categories, because it fits with what you can see on a bank statement. So in that expenditure side, then that's when you're looking for, okay, did I expect to pay this person? So that's why we kind of recommend doing that. And sometimes it might be that it is normal that the company you're paying looks different, but you're going to know that as the business owner. Yeah. It's just that from a data indication, it might be, hey, this is kind of weird. Oh yeah, that's normal. This is how we always do it.
And I guess on the flip side of that, it's important for companies that are making payments to customers or vendors, however it works out, that they're what is showing up on statements is clear and concise and makes sense. A really good example I have is a company that pays me commission for a little bit of stuff here and there. And they have switched to using a third-party company to make payments. So I get this statement from this third-party company, which I don't recognize it, saying that I'm getting paid on some account, which I don't recognize, doesn't match up with any account that I have. And it's for ad hoc work.
That's very vague.
Extremely vague. And I ultimately went back to the company and said, hey, I got a statement saying that ultimately I figured out it was a statement that you guys were going to pay me money. But nothing said, there was no single line saying your company name or an account number that matched up anything I have with your company. It looks really suspicious. It looks like a phishing scam. You should probably fix this. And the person said, no, we've heard of this issue before, and that's just how the system works. I'm like,
okay.
Because if I got a piece of paper in the mail with it, I would have no way of tracking it back to the company I was dealing with. So I guess it's important to make sure that your transactions are appearing on statements in ways that people can actually figure out who you are.
Right. That would be helpful.
So are there particular transactions? I know we talked about watching payroll. Are there more specific types of transactions that we should be watching out for that are higher risk?
On a more granular level, most people who are committing embezzlement pay themselves in even dollar payments. So they're not necessarily writing themselves a check that's $1,234.57 or something. It's just going to be $1,500, right? $5,000. I had one a couple of years ago, $200,000. So, right? They were normally $40,000 to $50,000 payments to themselves, but then a couple times it was $250,000. So, if you even just want to go and look in QuickBooks or Xero or whatever accounting software that you're using, you can just export all of the payments, and using Excel and a filter, just filter for payments that end in, even dollar amounts, or multiples of 100, or even multiples of 10, or multiples of 1,000. And that will identify it. Now, it doesn't mean that all of those are bad, though, right? Because if you've gotten a bill from an attorney or a consultant, a lot of times those will just be a $5,000 retainer or something. So those would be normal. But what I like about looking at, especially embezzlement cases, from the eyes of the best data sources, which are bank statements, credit card statements, and payroll reports, is that I can use data and these indicators to help me find things that I wouldn't find otherwise. Mm-hmm. So I don't love the needle in a haystack analogy, because I mean, this is what I've done for my entire career. So I feel like I hear that all the time, but it really does. Data analysis, and it doesn't even need to be scary, what we're talking about. This isn't magic, right? It's just understanding what's high risk. So looking for even dollar payments out of all of the expenditures in a company is not complicated. And so we can just identify those. Now, those are the indicators that then allow us, that's going to give us a smaller data set to look at that we can actually wrap our minds around, and then say, okay, I expect $5,000 to be paid to this attorney. I expect whatever to be paid to some consultant. Fine. But I don't recognize these companies. And so then that allows us to then go in and say, okay, let's go find the supporting documentation for why am I paying ABC123 Co. $10,000. Yeah. And then maybe we research that on a Secretary of State website or wherever the company, in each state where they register their businesses, and say, okay, who owns this? Oh my goodness, Bob from manufacturing owns this business. Why are we paying Bob this money? So that's how that thought process works.
And I suppose it's also someone who's wanting to kind of self-audit, let's say. They need to do more than just look at, we'll use QuickBooks for that, more than look at QuickBooks, because I suppose maybe not necessarily even clever, someone who's taken money from the company will just not even log the transaction in QuickBooks.
That's correct.
So
that's why looking at those bank statements are important. Your best evidence, if you want to know what is actually happening in my business, I feel like a broken record, but you need to look at bank statements, credit card statements, and the actual payroll reports. That's right. Because a lot of times, if one person is controlling things and that person is stealing, they're not even reconciling QuickBooks. So anything that they don't want you to see, they're just not putting in QuickBooks. And then they're never reconciling. And I like to tell small businesses, if the person handling your bookkeeping is not reconciling, you have a major problem. It may not even be that they're stealing money, but if they are not reconciling, you don't know how much money you have or that you've made. You cannot have reliable financial information without reconciling. So I sometimes do presentations for small businesses, and I'll tell them, like, yeah, the rest of my presentation is interesting, but if you are not reconciled, like, you should just leave now. Like, you got to go get that settled, because this might be interesting to hear about all these people who have stolen money and bless their hearts, but if you aren't reconciled, you have a bigger problem. So,
and for people that are not in accounting and haven't done accounting, what is reconciling? And it's something that individuals should be doing also on their statements.
Correct. And we don't do it as much anymore just because of debit cards and credit cards and all of that. But essentially, it is making sure that everything that you've paid on the company side, you need to see, did this clear the bank? And you're going to identify by comparing these two sources of information, so QuickBooks to the bank account, you're going to find out, oh, something cleared the bank that I didn't see in QuickBooks, or I have something in QuickBooks that hasn't cleared the bank yet. So you may think in the bank that you have $20,000 left over for the month. Great. But then you find out there's a $15,000 check that hasn't cleared to a vendor. So really you don't have $20,000, you have $5,000 of actual cash. So that's how, that's the process or kind of idea of reconciling those things. And if someone is not reconciling, then you don't actually know how much money you have, because the only real number is what comes into the bank and what leaves the bank.
That's a little scary. And last thing, you don't want some vendor who hasn't cashed a check sitting out there for an extra couple of months, and all of a sudden you get swept for a much larger amount of money than you were expecting.
Right. Exactly.
I've unfortunately have had that happen one time, where someone sat on a fairly large check, and it took me actually calling them saying, hey, I noticed you haven't deposited the check yet. Oh, it's still sitting on my desk. And I'm thinking, must be nice to have a business where you can let payments sit on your desk for months. But it was the sort
Right.
of thing. It's like, gee, I've got more money in my bank account than I think I should have in there. Something's.
Yeah.
Oh yeah, look that one check hasn't cleared yet. Are there, like, speaking of, like, from the banking side, are there things that small businesses can put into practice, like the owners can put into to place to kind of prevent some of these superfluous illegal transactions from happening?
Well, you might call me a pessimist. Somebody might call me a pessimist, but I don't think that fraud is something fraud, financial fraud, like what we're talking about.
Mm-hmm.
I don't think you can prevent it 100% of the time. It's about detecting it quickly.
Mm-hmm.
So the Association of Certified Fraud Examiners says that the like the median life of a scheme is 18 months. Out of every case I've ever worked, I might have had one or two. I've worked probably close to 100, 150 cases in my career. I'm probably closer to 200 at this point if we throw in divorce cases too. But I've worked a bunch of cases in my career. The majority of those cases, the theft has been going on longer than 5 years.
Oh wow.
So if we just think about this, that loss is adding up every year. And every time I've worked a case that's happened for a long time, there's this exponential growth curve that you could draw based on that loss amount, because it'll start small. They get more confident, more confident, more confident. And then at the end, there's just this huge loss, especially when, I mean, even somebody stealing, let's say that they're stealing $50,000 a year. That's still significant when we add all of that up over that time frame. So a few things, looking at the bank statements, and like I said, it's not about preventing it 100% of the time, it's catching it when it first happens. So if we're looking at the bank statement and somebody has paid their electric bill or their credit card bill with company funds, we catch it at the beginning, maybe a few months rather than several years.
Yeah.
Another thing that I recommend is creating a bank account that is only for operating expenses. And so a book that kind of inspired this was actually the book Profit First.
Mm-hmm.
And so he's not talking about fraud prevention at all.
Yeah.
He's talking about cash management. But whenever I read this book, I thought, oh, this is a great fraud prevention measure especially for a small business, because you know how much your rent needs to be every month. You know how much all of these expenses should be every month. For us, we spend a lot, like payroll is our number one expense. After that, it's technology. So I know how much that technology is every month. And so I can put that sum of money into a bank account that's what my financial person can control. Mm-hmm. Because if that's short, then I will know immediately I have a problem. And then the whole concept of separating out profit. So separating out your profit first, separate out your taxes, separate those things out into other bank accounts. And then the owner only has access to those accounts. Because when money comes into your business, there are certain types of expenditures that are already spoken for, like I talked about.
Yep.
Rent, payroll. So those go, all of your expenditures that you know you're going to have to pay, that you can reasonably estimate, that goes in one bank account. The part that people steal is the extra, which is our profit. So people are stealing profit. They're stealing the cash you should have available to pay your taxes. They're stealing the cash available that you should have to pay payroll taxes, all of those things. So if you can separate out those quote unquote extra funds, which aren't really extra, right? If I'm running a business, I need profit to reinvest. I need profit to cash flow because there's always timing issues. So if I want to improve equipment or improve something in my process, I have to have profit to do that. So it's not actually extra, but that's the part that gets stolen. Mm-hmm. And once somebody has eaten through all of that profit when they shouldn't have had access to it, then I'm going to start finding and seeing these cash flow issues. I'm going to be saying, what is wrong with cash? But we don't want to get to that point. We want to catch it when it happens. So segregating out the funds that these are the bills that have to be paid. This is what it is expected, and only giving the bookkeeper or whoever's handling financial information access to that bank account is one of my number one suggestions.
Is this the sort of thing where that the accounts should be at separate institutions, or just that the bank only allows one specific user to move funds in and out of those accounts?
Right. So all of mine are at the same bank account or the same banking institution, but um, I get to choose who has access to what. And sometimes the bookkeeper doesn't even need access to actually be able to transfer funds. You can just give her read only. Now there's is it bill.com? Bill.com sets things up where you can have approvers. So then your bookkeeper can handle, okay, all of these things need to be paid, but they can't actually send funds without the owner approving it. So that's a really easy way to do that. But at the bank level, and I actually use a local financial institution. So it's not like there's a ton of bells and whistles, but even at the local level, they can help me get really granular about what can this individual have access to.
And I suppose it also helps on the fraud side of that if someone sees the account numbers of that cash account and is able to externally steal money, you've limited what they have access to as well.
Yes, which from that standpoint, I have a separate account for anything that's run through a payment processor. And then, of course, that gets moved over into the appropriate accounts. So when somebody says, hey, I want to send a payment via wire or ACH, I give them that account because there's never anything in it. Yeah. So if there's a breach, you're not going to get a whole lot. And then if there's a breach, I'm not going to have to change where all my automatic payments come from, right? So that's how I handle that.
Yeah, I've heard of people doing it both ways, that they have one account that is specific for incoming wire transfers and another account that is specifically for outgoing transfers, just to, if something gets compromised, the risk is mitigated, even if it's just the issue of I have less people to contact because I have to change an account number.
Right.
So what are some of the craziest embezzlements you've seen?
Well,
because you talked about one where there was that it worked up to a $200,000 transaction. I don't know if that was a real example or just illustrative, but
yeah,
what's some of the crazy ones?
That is part of one, but the one I like to tell is there was this guy. He was working in an oil and gas company. So I live in Oklahoma, so we have lots of oil and gas, and he was working at this oil and gas company, and he kind of worked his way up. He'd been employed there about 9 years, and he had a degree in finance, but he also was really good at running operations. So he would run operations for all these different well sites where they were drilling. And then he had a lot of responsibility because he'd been there so long and everybody trusted him. And so if he needed a new piece of equipment or something out at a site, he had the authority to just take care of it and then move on. Well, the CFO at the time, he was going to retire. And so a new CFO came in, which was Buddies, and we're going to call him Bill because we actually have a game that's based on this case. So that'll help me tell this story. So we're going to call this guy Bill because that's his name in the game. And so Bill had this friend that was a CPA. And so he said, hey, my company's hiring for a new CFO. Do you want to come in? And, yeah, it's a great job. So the new CFO comes in and he starts seeing on the bank statement that there's all these withdrawals from the bank. And he's like, that's weird. So withdrawals on the bank, it just shows you the withdrawal slip. You can't see if it was for cash or a cashier's check. You have to ask the bank for that information. So he asked the bank for the supporting information. Bank sends it to him. And the new CFO is like, gosh, like BDW LLC. I think that's Bill's company. That's strange. Okay. So then he goes month after month and he sees another one and it's like, BW and DW LLC. And he's like, no, I know that's Bill's company. Like, what is this about? So he had some auditing experience and had done fraud trainings and stuff. And so he knew that there was like, this might be a fake vendor scheme, like this just doesn't look right. So he went to the owners of the business and said, hey, I think Bill, this very trusted employee, is stealing money. Well, it turns out that Bill had created a whole bunch of fake vendors. Oh. And by creating these fake vendors, they were all like in his, like with his initials or his family's initials and stuff. And because it was so generic, nobody was going to notice, but he would go to the bank and he had access to the bank account after a certain point where he could actually make withdrawals and get cashier's checks to pay people. because whenever this company first started, especially in oil and gas, they would, what they're paying vendors is such a large sum of money that until vendors get to know you, they will actually require that you pay with a cashier's check. So he kept using that practice, even though the company had been around, he kept using that practice to benefit himself. So he would go to the bank, get a cashier's check to one of his fake LLCs, and then the former CFO would see this withdrawal and would say, hey, Bill, you need to come in and code this, because he was a finance guy. Mm-hmm. And so Bill would say, oh, yeah, I'll come in and I'll code it. And so he'd fix it later. So that's how that ended up being caught, because there were all of these unreconciled withdrawals. So that was one of the ways. He had a legitimate company that was doing business with his employer and with a business partner. And then he had actually set up another bank account that his business partner didn't know about. And then he would just make payments to that vendor, to that bank account. So there were legitimate invoices for work and legitimate payments corresponding with those invoices. But then to that same company, we call it Serve Right Oilfield in the game. So to Serve Right Oilfield, there were also payments, but they were going to a separate bank account that were for absolutely no work performed.
So he's basically effectively defrauding two companies in a way.
Yeah. Kind of using his business partner had no idea that he was also stealing money with their legitimate business.
He was using his own legitimate business to launder money for himself.
Yes. Yeah, that would be pretty accurate there. So, okay. So then this case, there's a bunch of fake vendors, the real vendor, but then we just call it fraudulent billing, making extra payments. And then he had access to the bank account, right? He could basically get a cashier's check for whatever he wanted. And so he also would just pay vendors directly. So he bought cars and boats and, trucks and tractors. Now, I think what makes this case interesting, it's pretty bold. He stole over $3 million doing this. Goodness. And I think we only looked back 5 years of his employment. So he stole $3 million over this period of time. And it's okay, clients always think you've stolen $3 million. The money has to be somewhere. It's under a mattress somewhere or buried in the backyard. No, he spent all of it. He was really into Chili Bowl race cars. They're this indoor racing thing. Anyway, they're I just know around here we have an event every year called the Chili Bowl. Anyway, it's indoor racing. And so he would sponsor all of these racers. Wow. And then he would buy race cars, and then he'd buy, things that people could come and work on their race cars with him. And then but he never drove any of the race cars he bought. He just bought all this stuff, and then his buddies would come and hang out with him all the time or hang out at these racing events. And then he bought really exclusive firearms, collector firearms. He never shot a firearm. He just bought it for his buddies. So we call this case in our game and also in the book, the case of the man cave, because he just kept buying all this stuff. And if you're going to have all of these toys, right, you've got to have something to store this in. So on his company's dime, he built a metal building on his land, $100,000 metal building. That was one of my favorite finds. I don't know why. But in the end, because he bought all of these kinds of things, they were able to auction whatever existed still at the end. And so they were able to collect about $900,000. So that was their piece. So they got about a third back. He was charged with not paying taxes on that stolen money. So he was charged with that, and he actually received the maximum sentencing of 3 years in prison. So he got out, it's probably been 2 years ago now.
I think some people would be comfortable going to jail for a year for $1 million.
Yeah, I don't.
I wouldn't, but
I would not. I think it's not even the prison thing to me. It's really all the freedoms that I lose, you just don't get things back after you have a felony.
Yeah.
So, that's usually my deterrent my entire life. But so that's one of my favorite stories, because he just really wanted to be everybody's friend. And that's why he bought all of this stuff and would pay for all kinds of things for people.
It's interesting because most of the fraud cases I've heard of, it's paying gambling debts or things of that nature, that someone got in too deep with something and they're trying to bail themselves out of it in the hopes that, well, at some point in the future I'll be able to pay the company back. But this sounds like the guy was just like, no, I'm entitled to this money and I'm going to spend it on my friends and my family.
So also being in Oklahoma, we have a lot of casinos here. And so that's what I had heard before I started my business, that, most of these types of cases, they're stealing because of gambling or whatever. I've had maybe a couple since in the last 11 years. The majority of my embezzlement cases are people who are addicted to shopping or feeling important. So gambling is not one of the top things for me. I don't know why. I seem to just attract the cases where people are addicted to shopping, but or narcissists. But
so were there, outside of the accounting aspect, some of these cases, were people suspicious before the accounting issue came to light? Okay.
No.
So it was all discovered through the accounting. It wasn't like, gee, Susie just drove up in a Lamborghini. Let's dig into this. It was someone had less money in the bank account than they thought they should have and started looking.
Yeah. So oil and gas, it's kind of interesting because I say that it has just its own market of what it pays people. So people will end up making, like, even employees will be paid like premiums for what they're doing when oil is good. And then they'll just lay everyone off when oil is not good. And so it's kind of a strange industry. So for this guy, he was getting paid really, really well when he was working here. And I think people just assumed, like, oh, well, yeah, he's in oil and gas, like he makes plenty of money. So no one knew. No one was suspicious at all. Oil prices were good at the time. There's plenty of money. No one knew until the new CFO came in and said, this is weird.
Yeah. So it wasn't like the receptionist drove up in the Lamborghini and everyone,
no.
Oh yeah, that's perfectly normal for our receptionist. But
no,
it wasn't so far outside of the lifestyle of someone who is in that position might have.
Right. No, it wasn't. And a lot of times in our behavior indicators, when we're talking about that in trainings, I think the most telling is when someone is management's favorite, but no employees want to work with the person. Like, they're terrible to other employees, but management loves them. I always see that as a higher risk than somebody driving up in a fancy car because, money's pretty accessible these days. So, and being able to lease cars and things like that, so to me, it's like, if it's their personal decision to live in a dumpy house and drive a Lamborghini, like, they can do that. That's not necessarily like the best. I mean, I can come up with a lot of reasons why someone might be driving up in a Lamborghini. Yeah. But the thing that seems consistent in every case is that, oh man, management just loves this person, trust this person. But I think it's part of the deception going on. So as long as they keep management happy, but I don't think that as a human, they have that energy to also keep everyone else happy. So the employees usually really hate working with them.
I mean that seems to make sense because they're exploiting the trust that they benefit from, the trust that they have from the ownership. There's no benefit to the trust of the rank and file.
Correct. Yeah. Well said.
So is most of it on the smaller businesses, like friends and family are the ones doing the embezzlement, or is there kind of it's just across the board?
It's just whoever the owner has decided to trust. And sometimes that's family. I've had plenty that were family, they hire the brother's wife to do bookkeeping, that kind of thing. And she ends up having some sort of issue and stealing money, and the brother didn't even know. There's plenty of those. But then also, like in the case of Bill, he was not related to any of them, but he had worked with them for so long that they just trusted him and kind of, adopted him as like their son.
He became family.
Yeah. And I would say in a lot of these situations, that is the case. And that's why the victim feels, the victim feels a lot of stuff, but after it happens, but just that betrayal of trust, because I mean, if I had $1 every time one of the victims said, they went on vacation with us, they babysat our kids, just that betrayal, I think, is what is just the most emotionally charging through these events.
Mm-hmm. I mean, it ultimately sounds like, regardless of how much you like your accountant, if you have a single accountant or even a team, that you really do need to have a process in place to just monitor, not to assume, not that you think that people are doing bad things, but that's just this is part of my business practice, that every quarter, every couple of months, I do this to check for fraudulent transactions.
Yes. And if it's just standard, like this is just what I do, this is what I want to do as the owner. Because at the end of the day, the owner is the one responsible for anything in those bank accounts, not the employee, the owner is responsible for making payroll at the end of the day. And so, yes, we can blame the bookkeeper, but at the end of the day, the buck stops with me. Right? I own Workman Forensics. So that's where that stops. And I can't tell you how many times we have people call that are either in a partnership where like a partner controls the money, like a business partnership, or they have a bookkeeper that's an employee that they say, yeah, I'm not on the bank accounts. They just always control it. And now I'm asking for the bank accounts and they won't give it to me. No, you're the owner. March down to the bank, show them you're the owner, and get added to this bank account. I don't care if this person gets mad.
Yeah.
It is your business. And if we were talking about this week with a potential client, that, you can have someone like us come in and just do a simple, like we put together your source and use and things like that, and I identify some anomalies for you. You can do that. And if your bookkeeper gets mad, too bad. Like, it is your right to check in. And if you have a weird feeling, don't talk yourself out of it. Just check. That doesn't mean that you don't trust someone. You're just making sure that everything you've been entrusted with, you're taking good care of. So,
and probably even more so if your accountant gets defensive about you getting involved in your finances. That should be a red flag. And
that doesn't necessarily mean that there's fraud, but there's at least negligence. Okay, like they're just at least not doing their job. We get hired a lot of times when they're like, they're just being weird and I just want to check on this. And then there's nothing there. They haven't stolen anything, but they weren't doing collections because they just didn't want to call people. And so then they started writing it off. And that's why you have no money. That actually happened. So, just gut check. Something doesn't feel right. Just check. It's your business. You have the right to do that.
I think that's a great place to leave it. I did want to ask the investigation game. Where can people find that online? Because that seems like the sort of thing that families could play at home, and it's not just like, it's a CFO type of thing, but that it's more widely adopted.
Yeah, we have a couple different options. So everything about Workman Forensics, about the Data Sleuth book, about investigation game, about our podcast is on our website, workmanforensics.com. And there's a nice clean menu up at the top identifying just those things. So, and we have lots of blog articles with free downloads and resources. We have a really nice YouTube page as well with lots of advice and grouped playlists, nice playlists and stuff that hopefully people can find what they're looking for.
And so what's the complete title of the book?
The complete title of the book. Oh gosh, I probably should have printed it out. It's long. It's called Data Sleuth: Using Data in Forensic Accounting Engagements and Fraud Investigations.
And the target audience is whom?
This was originally written for professionals who either do this kind of work, paralegals, attorneys, private investigators. But we do walk through the process. I walk through the process of how to work a fraud investigation, and I include lots of stories. So I think that if anybody's interested in just knowing, okay, how could I do this in my business, you can apply it from this book.
That's awesome. Good, some entertainment value, but also some education value, kind of regardless of where you are on the participation level in this.
Correct. And if you don't really want to understand how the data part works, it's only like 3 chapters, so you can just have somebody else read those parts and then skip over.
Hand that part off to the person you've designated as your investigator and just read the rest yourself.
That's right.
Leah, thank you so much for coming on the podcast today.
Thank you so much for having me.
Thank you for listening to this episode of the EasyPray podcast. If you found something in this episode helpful, please share a review at easypray.com/review. Notes and a transcript of this episode with Leah Wietholter can be found at easypray.com/118.